Today, I'm reminded of an old Warren Buffett quote: buy when others are fearful, sell when others are greedy. Right now, the market is extremely fearful. Yes, I've put out some bearish videos over the past couple months that definitely played out well, but stocks don't go down in a straight line. Okay, there's going to be multiple oversold rallies in kind of this move lower that I'm projecting for the next 12 months or so. So, although I still think that markets definitely have some structural issues, such as higher interest rates, I think this week we could see a pretty solid rally on the back of tech earnings and some other factors that I'll go over right now. And just to kind of give you a measurement of that fear, we are seeing the fear gauge at 26, almost taking into extreme fear at 25. So the market is very fearful at this point in time. And it's also worth noting that the put to call ratio is positive right now. So that means that there are more puts being bought than there are calls. Very unusual. The only time that has happened in the past, or in the past 12 months, I should say, was in late September when we got that rally, right? Was also in March when we got the rally off of SPB, and in late December once we had that kind of that tax selling. And then obviously to start the year for 2023, we had a pretty good rally. So put to call ratio is implying bullishness. Fear is in the market. Therefore, I believe, we see the stock market have somewhat of an oversold rally over this coming week. And then let's take a look at something I saw. And I think stories like this are very common when fear is at its height, right? So there's kind of nothing burger stories that are kind of tricking people into thinking that it's a huge deal. And this is one of them. So hedge funds are using computers to trade equities at and are expecting to start selling to the tune of $20 to $30 billion in the next 2 weeks. That doesn't matter. 20 to $30 billion when you consider that the stock market is $46 trillion. That's literally nothing. That is the most irrelevant story I've seen in a while. I know this is unusual Wales. He's probably just trying to pump out a story. I actually like a lot of the stuff that he does, but this is coming from CNN. That's who originally put out a story about this. $20 to $30 billion doesn't matter, but there's so much fear in the market, right? You're seeing eyeballs on videos, stories move to fearful videos, right? Unfortunately, I did a fearful video earlier last week. Actually, no, it was this week, but I that was more of a long term call, right? What I'm saying right now is that in the short term, this next week, we have the catalyst of tech earnings. We have a couple other things going our way, which I'll cover right now. So Israel Hamas, right? And I understand everything that's going over there is not good for the market. It's not good for the world, obviously. Sucks to see lives lost, but from a market standpoint, it's really this weekend. A lot of folks were expecting some huge issues to pop off. We just really haven't seen it. So unfortunately, I think expectations are for a massive conflict, more countries getting involved and, kind of a furthering of this war. I think that's what markets were somewhat expecting or fearing at least. And we haven't gotten that so far. Yes, there's been some air raids. I see an air raid on a mosque. Israel army on Saturday arrested 52 Palestinians. Israel authorities say they have ordered the evacuation of more than 14 communities. So there were 6 fighters killed on one day. Given that the death toll in Ukraine is hundreds of thousands and the market has still moved higher regardless, I don't think this is, unfortunately, for the world, it's a big deal. But I think in the short term, I don't think it's a huge deal for the market, especially what's happened over the weekend hasn't, like, the stock market is a reflection of expectations, right? So if expectations are for something bad and then something better happens over the weekend, well, stocks should be up, right? So I mean, like, yeah, it's Sunday morning when I'm recording this, and obviously anything can happen. But from where I sit, this weekend has been a bit calmer than people would have thought. I'll note some other things here, though. The U.S. is deploying additional air defense systems to the Middle East in response to escalations. Um, Canada has joined the U.S. and France in saying Israel was behind the explosion. So really a bunch of posturing. India has sent 38 tons of humanitarian aid to Egypt. Thousands of protesters around the world are protesting and expressing solidarity with Palestinians, calling for the end of Israel bombing. So, I mean, like, yeah, there's still stuff happening, but compared to where expectations were and what has happened over the weekend, it's been pretty calm. So, calm relative to expectations for Israel. And I want to go over one stat I loved from BlackRock's recent quarterly outlook note. And they talked about how when the stock market is up over 16% from Q1 to Q3, since 1957, there have only been 3 instances in which the stock market has moved lower in Q4. So what does this tell you? This tells you that when the stock market is up over 16% from Q1 to Q3, almost always the stock market is positive in Q4. So that's kind of a positive for the market, obviously. Throwing some stats out there that, this Q4 seems like it would be a positive one for the market just based on history. And then, like I said, let's talk about earnings here. So we have Microsoft on Tuesday, Alphabet on Tuesday, Amazon on Thursday, Facebook on Wednesday. So you're talking about, the four largest tech stocks reporting earnings next week. So, huge deal there. These tech stocks aren't massively hurt by rising rates either, like Tesla. So, we saw Tesla really get hit bad, and that was from those earnings, right? Because earnings came in so poor, but it was really due to rising interest rates, right? So, if interest rates go up and you're going to get an auto loan, you're going to have to pay more, right? It's going to be tougher to get that auto loan, right? So that's kind of why Tesla moved lower off of earnings, and that's kind of why they saw a massive miss. But Microsoft, Alphabet, Facebook, Amazon, they're not in those interest rate sensitive businesses as much. Obviously, any company is really hurt by rising interest rates when you're kind of consumer facing, but not to the extent of an auto company, right? So I think these Microsoft earnings come in better than expected. I think Apple comes in better than expected. Amazon, Facebook, they probably all come in better than expected. So when the largest companies in the world report better than expected earnings, that's going to rise. That's going to kind of bring the S&P 500 higher and likely move a ton of stocks higher, kind of in proxy, right? So I don't think Tesla's earnings is indicative of the earnings that we're going to get this week from Microsoft, Alphabet, Amazon, and Facebook. I think those businesses are a bit less correlated to the interest rate market. Obviously, there's always somewhat of a correlation when you're talking to the consumer, but not as much as a pure car company, right? So I'm thinking that these earnings will be bullish and likely act as a catalyst for next week. And then in terms of what we will get for economic data next week, we get GDP on Thursday at 8:30, and it's actually projected to be a pretty high number. So we're projected to have GDP at 4.5%, which is above the previous number of 2.1. So GDP likely comes in pretty hot, and that could act as an additional catalyst for the market. And we also get core PCE on Friday, and our last core PCE number was 0.1, and expectations are for 0.3. So we're already expecting a jump in PCE, which is the Fed's preferred metric of inflation. Therefore, expectations are for a jump, right? So if we're in line or below that jump, we're set up for a nice rally on Friday, right? So it seems as if we're set up to beat expectations, right? So we're beating them in terms of conflict over this weekend. Earnings expectations are somewhat negative now because of Tesla. I think we beat that. And we have these two numbers that, or really PCE that has a expectation of a high number. So if we come in at that number or below, I think the market's likely rally. And then let's take a look at interest rates here. So interest rates have been on a tear over the past couple weeks, and we actually topped out at around, at around 5% on Friday and Thursday. We're nearly overbought according to RSI here. So I think we see somewhat of a fall for interest rates over this coming week, which would obviously be bullish for the market. And it's also worth noting that there's a wide range of opinions on the market right now. So I expect pretty big volatility. It could be positive, could be negative, but we see that the spread between the low end target and the high end target is the highest it's been since 2009. And I'll read some of the bearish notes to kind of even myself out here. So Barclays says, we acknowledge some upside risk to our scenario analysis. Given peak inflation, strong consumer balance sheets, and a resilient labor market, however, current multiples are baking in a sharp moderation in inflation and ultimately a soft landing, which we continue to believe is a low probability event. And that was from the street low 3,600 price target for S&P. These are at end of 2023 targets. So yes, they're bearish, but they also acknowledge that there are definitely a couple reasons that they could be wrong, which tells me that it's not super high conviction. And then let's talk about the most bullish rating. So this is from CFRA research. After enduring a challenging first half, as the economy finally scrums to the long and anticipated but mild recession. So this firm here sees a recession coming, but they still have a positive year-end outlook. So that's definitely signaling to me that why can't this market rally in the short term? Long term, if we move 12 months out, market's probably going to be lower. I've put out a bunch of videos on that. There are structural issues for this market, but at the end of the day, there are still bulls on Wall Street. Interest rates look like they're a bit overbought. We could see somewhat of pullback. PCE expectations are for a pretty steep jump, which kind of sets us up to kind of beat those expectations, right? Earnings calendar, we have huge companies reporting this week. I think they come in better than expected. BlackRock has put out a study, as I covered, that there's only been 3 instances in which the market has moved lower in Q4 when we've moved over 16% from Q1 to Q3. So that's bullish. And then the war developments over the weekend haven't been as concerning as feared. Seeing a lot of stories that are kind of BS stories, and the fear gauge is reading fearful at this point in time. So with that being said, I think markets likely move lower. Actually, might likely move higher over this coming week, lower in kind of the long term. But anytime you get a drop in the market, it's not just a straight line down. That doesn't happen, right? There's a bunch of oversold rallies throughout that downtrend. I think we're about to get a pretty big one for this week. So that's my opinion. If you would like to see what individual stocks I am buying this week, what kind of options I am playing, what charts I'm looking at, I break down literally over 10 charts in this video right here. So check that out. Click on that video, and thanks for watching.
Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock and option markets. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio to help optimize your assets to meet your personal financial goals. Additionally, to better assist traders when searching for setups, I'm selling trading bots which will give you buy and sell signals and tell you how your trading strategy has performed historically on any stock or cryptocurrency that you're researching. Finally, if you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.